Tax season. Two words that can either evoke dread or excitement. Most people see it as a chore, a time to begrudgingly hand over their hard-earned money. But what if I told you that you could flip the script and actually to tax season? It's all about understanding the system and using it to your advantage. This isn't about shady loopholes or cheating the government. This is about legally maximizing your tax refund by taking advantage of every deduction, credit, and strategy available to you. It's about keeping more of your money and achieving your financial goals faster. Think of it like this. Every dollar you save in taxes is a dollar you can invest, pay off debt, or use to pursue your dreams. It's time to stop leaving money on the table and start treating your tax return like the financial windfall it can be. Ready to unlock a bigger tax refund than ever before? Let's dive into the strategies that can make it happen. Most taxpayers are familiar with standard deductions, but have you heard of above-the-line deductions? These gems can significantly reduce your taxable income, leading to a bigger refund. They directly reduce your adjusted gross income, AGI, which is a key factor in determining your tax liability. One powerful above-the-line deduction is the student loan interest deduction. If you paid interest on student loans, you might qualify to deduct up to $2,500. Another often overlooked deduction is for contributions to a traditional IRA. By contributing to a traditional IRA, not only are you saving for retirement, but you're also potentially lowering your tax bill in the present. This is a win-win situation. Above-the-line deductions are like finding hidden treasure on your tax form. Don't miss out on these valuable opportunities to reduce your taxable income and boost your refund. Speaking of retirement contributions, maximizing them should be at the top of your tax-saving checklist. Why? Because it's a double whammy of benefits. You're securing your future while shrinking your current tax burden. If you have a 401(k) through your employer, aim to contribute at least enough to get the full employer match. It's free money, and don't stop there. Consider maxing out your contributions if your budget allows. The more you contribute now, the less you'll pay in taxes, and the more your money will grow tax-deferred for retirement. For those who are self-employed or don't have a 401(k), explore options like SIP IRAs and solo 401(k)s. These accounts offer generous contribution limits and can significantly reduce your tax liability. Remember, investing in your retirement is not just about securing your future. It's also a savvy tax move. Education can be expensive, but luckily there are tax breaks to help offset the costs. Whether you're a student, a parent paying for a child's education, or even returning to school later in life, don't miss out on these valuable benefits. One of the most powerful education tax breaks is the American Opportunity Tax Credit. This credit can be worth up to $2,500 per eligible student for the first 4 years of higher education. Another valuable option is the Lifetime Learning Credit, which offers a credit of up to $2,000 for qualified education expenses, including undergraduate, graduate, and professional degree courses. In addition to credits, there are also deductions available for education expenses. The student loan interest deduction, for example, allows you to deduct up to $2,500 in interest paid on student loans. Remember to explore all the education tax benefits available to you and maximize your savings. Every little bit counts. Owning a home comes with its own set of financial responsibilities, but it also unlocks a treasure trove of tax advantages. One of the most significant tax breaks for homeowners is the mortgage interest deduction. This deduction allows you to deduct the interest paid on your mortgage, which can result in significant savings, especially in the early years of your mortgage. Another perk is the property tax deduction, which allows you to deduct property taxes paid on your primary residence. But the tax benefits don't stop there. If you made energy-efficient improvements to your home, such as installing solar panels or energy-efficient windows, you might be eligible for tax credits. These credits can help offset the cost of these improvements while reducing your carbon footprint. Homeownership comes with its challenges, but don't overlook the valuable tax advantages that can save you money and make owning a home more affordable. Healthcare costs can take a bite out of your budget, but did you know that certain medical expenses might be tax deductible? Knowing what you can and can't deduct can lead to significant savings come tax time. One important thing to remember is that you can only deduct medical expenses that exceed a certain percentage of your adjusted gross income, AGI. For 2023, this threshold is 7.5% of your AGI. If your eligible medical expenses exceed this threshold, you can deduct the excess amount. Deductible medical expenses can include a wide range of costs, such as doctor's visits, hospital stays, prescription medications, and even certain medical equipment. It's essential to keep thorough records of all your medical expenses throughout the year so you can easily calculate your deduction when it's time to file your taxes. Don't let those medical bills pile up without exploring the potential tax deductions that can help offset the costs. Section 7. Charitable giving. Reduce taxes while making a difference. Giving back to causes you care about is not only personally rewarding but can also be financially savvy. Charitable donations can often be deducted on your tax return, reducing your tax liability and allowing you to give even more. To claim a deduction for charitable contributions, you'll need to itemize your deductions on Schedule A of your Form 1040. It's important to note that you can only deduct donations made to qualified charitable organizations. Be sure to keep detailed records of your donations, including receipts, canceled checks, and any other documentation that proves your contributions. Consider strategies like bunching your charitable donations into a single tax year to maximize your deduction. For example, if you typically donate a certain amount each year, you could donate 2 years' worth in 1 year to exceed the standard deduction threshold and itemize your deductions. Giving back to your community and supporting causes you believe in is a noble act that can also come with tax benefits. In Section 8, Self-Employed Secrets, Tax Advantages for Freelancers and Business Owners. Being self-employed comes with unique tax considerations, but it also unlocks a world of potential deductions and credits that traditional employees often miss out on. One of the most significant advantages is the ability to deduct business expenses. This can include everything from office supplies and travel expenses to marketing costs and professional fees. Keep accurate records of all your business expenses throughout the year to maximize your deductions. Another perk for self-employed individuals is the deduction for health insurance premiums. If you're paying for your health insurance plan, you can deduct the premiums as an above-the-line deduction, reducing your AGI and ultimately your tax liability. Self-employment also opens the door to retirement plan options with higher contribution limits, such as SEP IRAs and solo 401ks. These plans allow you to sock away more money for retirement while reducing your current tax burden. Being your own boss comes with its challenges, but understanding the tax advantages available to self-employed individuals can make a world of difference in your financial success. Section 9. Child Tax Credit, a boon for families. For families with children, the child tax credit can be a game changer come tax time. This fully refundable credit can significantly reduce your tax liability or even result in a larger refund. For 2023, the child tax credit is worth up to $2,000 per qualifying child under the age of 17. The credit begins to phase out for higher income earners. To be eligible for the full credit, your modified adjusted gross income, MAGI, must be below certain thresholds. Even if you don't owe any taxes, you may still be eligible for a portion of the child tax credit as a refund. This means that even if your tax liability is zero, you could still receive a payment from the IRS. In addition to the federal child tax credit, some states also offer their own child tax credits, providing even more financial relief for families. Don't leave this valuable credit unclaimed. If you have qualifying children, make sure to claim the child tax credit when you file your taxes. Section 10. Conclusion. Take control of your tax destiny. Tax season doesn't have to be a dreaded time of year. By understanding the system and taking advantage of all the deductions, credits, and strategies available to you, you can unlock a bigger tax refund and keep more of your hard-earned money. Remember to explore above-the-line deductions, maximize retirement contributions, unearth education benefits, leverage homeownership perks, and deduct eligible healthcare costs and charitable donations. Self-employed individuals should take advantage of the unique tax benefits available to them, and families with children should claim the valuable child tax credit. Don't leave money on the table. Treat your tax return like the financial windfall it can be. By being proactive and informed, you can take control of your tax destiny and achieve your financial goals faster.